Hi friends, welcome back to Murthy Finance Academy. Today we will be discussing few companies from auto ancillary space. So the first company which we are going to discuss today is SJS Enterprises. But before we start, a quick disclaimer, I am not a SEBI registered analyst. Whatever the companies we are going to discuss are purely for educational purpose. Now let us start. So in today's premiumization era, the visual appeal of a product is often the deciding factor in a purchase. SJS Enterprises is the silent engine behind this shift in Indian consumerism. Operating as a design to delivery partner, SJS provides the aesthetic soul for global OEMs. Their moat isn't just in printing, it is built on a massive library of 12,200 plus SKUs and the complex orchestration of 11 distinct technology platforms. This complexity acts as a formidable barrier to entry. Managing that many high precision parts across diverse industries is a nightmare for competitors but a core competency for SJS. So the company's key product lines includes decals and body graphics, which defines the visual identity of two-wheelers and high-end consumer appliances. And second product line is 2D and 3D appliques or dials. Here, high precision interfaces for instrument clusters and control panels will be taken care. And the third product line is 3D Lux badges and domes, which offers premium branding with significant depth and visual pop for SUVs and refrigerators. Fourth is overlays and aluminum badges, which are rugged, metallic, premium feel often found on high-end electronics and industrial equipment. The next one is in-mold labels, IML or IMD. It integrates graphics directly into plastic parts for extreme durability and a sleek finish. The next one is lens mask assembly, wherein high transparency protection and aesthetic framing for digital displays and clusters. The next is chrome plated parts, the luxury signature for modern passenger vehicles, essential for high-end SUV trims. And the last product line is tinted or painted injection parts. So here, precision finished plastic components that define the touch and feel of a cabin or appliance. So by owning the entire value chain from initial artistic design to final manufacturing, SJS has transformed itself from a vendor into a strategic partner that OEMs cannot easily replace. If you see, the Indian auto and consumer appliances sector have reached a tipping point where look and feel are non-negotiable. Whether it is a digital cockpit in an SUV or the interface of a premium water purifier, aesthetics drive the premium price tag. This structural tailwind allows SJS to operate as a multiplier on industry growth. So in Q3 fiscal year 2026, SJS automotive business surged by 46% year on year. Compare this to the broader industry passenger vehicles and two-wheelers combined, which saw a volume growth of just 15.7%. Here is the kicker. SJS is outperforming its industry benchmark by a staggering 3 times. So SJS is a primary beneficiary of the PLI schemes and the aggressive localization push. By producing high-tech aesthetic components domestically, they help OEMs bypass import hurdles, which is a key thing, which is a key player in the value chain positioning. And the company is also aggressively targeting the burgeoning display market, which is estimated to reach a potential of 3,000 to 4,000 crores by fiscal year 30. So, as displays migrate from luxury models to entry level segments, SJS is perfectly positioned to capture this massive value chain migration. So, in terms of revenue diversification, the SJS segment mix is 38.8% comes from two wheeler and 42.3% revenue comes from passenger vehicles, and the remaining 19% comes from consumers and others. Ensures they aren't hostage to a single industry cycle. So, passenger vehicles growth is driven by the content per vehicle narrative. Major launches from partners like Mahindra have seen a record bookings. Example 94,000 units in 4 hours, and SJS has significant content in these models. And the consumer segment also saw a 7.5% QOQ turnaround. A critical alpha here is the global deal with Whirlpool. SJS is the sole supplier for specific global plants, creating high switching costs and recurring revenue stream. And exports also reached a record 283.1 million in Q3 fiscal year 2026 alone, growing 146.2% year on year. The Stellantis factor is the key driver here. SJS owns the badging for the whole vehicle, making their contracts extremely difficult for competitors to disrupt. With a new sales representative in Germany, the company is now knocking on the doors of Western Europe's elite OEMs. For a manufacturing player, the EBITDA to CFO conversion is the true serum. It tells you if profits are real cash or just accounting entries. With SJS, 76% conversion rate is best in class, providing high earnings quality. So the company reported a record-breaking revenue of 2,435.3 million, which is up by 36.4% year on year. And its EBITDA also reached 756.4 million with a 30.5 margin, the highest since its IPO. So there was a one-time hit due to new labor code that we can ignore. If we normalize this, the underlying EBITDA would be 774.5 million, representing an even more impressive 31.3 margin. And as of December 31, 2025, for 9 months, fiscal year 2026, the company sits on a net cash position of 2,030 million with a debt at a measly 69 million against 8,278 million equity base. So here shows the balance sheet is a fortress. So the company is cash rich, margin expanding, and virtually debt free. SJS has surpassed its entire fiscal year 2025 full year profit in just the first 9 months of fiscal year 2026. This is grade A financial health. And coming to its capital allocation skill is also where managements are truly tested. SJS is currently operating as a high efficiency machine with ROCE of 34%, which is a massive jump from 20% in fiscal year 2024, indicating exceptional returns on invested capital. And its ROCE is also stood at 19.8%, reflecting its high profitability relative to the equity base. And its new generation products also shown 23% of revenue. This is the high margin future for the company. And passenger vehicle kit value expansion, they are projecting its future kit value to be projected at between 3,500 to 5,000 rupees, dwarfing the legacy value of 1,200 to 1,500 rupees. And its two-wheeler kit value growth also keep on increasing, and they are projecting to grow by 1.5 to 2x now by reaching to 300 to 500 rupees, where premiumization hitting the two-wheeler segment as well. And its EBITDA to CFO, which is standing at nearly 76%, which is a testament to the cash generative nature of the business. The company's asset turnover also displays is expected to have asset turns of 5 times, significantly higher than the current 2 to 2.5 times in its new display business. So the recent earnings call also solidified the strategic pivot toward high-tech displays through the BOE Varitronix agreement. So the TLA with BOE Varitronix allows SJS to enter the multi-crore display market without the typical heavy manufacturing drag. By focusing on optical bonding and assembly, they can achieve high asset turns of 5x plus and superior ROCE. And management also targeted 2.5 times industry outperformance. They delivered 3 times. They have already delivered 1,229.2 million in PAT for 9 months fiscal year 2026, exceeding the total fiscal year 2025 PAT of 1,188.4 million. So there is also a Hosur initiative. The optical bonding and cover glass setup at Hosur is on track for fiscal year 2027 commissioning, with revenues expected in fiscal year 2028. The new Pune plant, SJS Decoplast, is utilizing SCADA-based systems, signaling a move toward fully automated high-tech manufacturing. So management is consistently under promises and over delivers. They are successfully integrating acquisitions while pivoting from printing to electronics integrated aesthetics. If company currently is at a growth at reasonable price framework, it fits well. SJS appears surprisingly at attractive despite its high PE multiples. So the company is now currently trading at around 34 PE with ROCE of 22.8% and with a sales growth of 20% for the TTM. And whereas its competitors like Unominda, Bosch, Motherson, all are trading well above the current PE of 34. So SJS trades at notable discount to high growth peers like Unominda, despite having superior 30.5% EBITDA margins. While the price to book value is around 7.1 times, which is high, the 44.4% PAT growth justifies the premium over the industry median of 25.8 times. So SJS is currently trading at a discount to its high growth peer group. Given its superior margin profile and growth rate, the current valuation is a sweet spot for quality seeking investors. So what are its red flags and risks which we need to watch out for? Are its ownership structure. Promoter holding is relatively low at 21.18% and saw a minor 0.3% decrease in the last quarter. And its capex intensity, the entry into the display market and the Pune Chrome plant involves a 100 crore commitment. While asset turns will be high, initial ramp up could see margin pressure. Customer concentration risk. Reliance on specific high volume models like Mahindra's SUVs remains a risk if those specific models lose market favor. And also input costs. SJS has been resilient, but sudden spikes in raw materials always threaten 30% plus margins. And coming to key strengths of this company are 30.5% EBITDA margins, which is best in class, 14 plus distinct manufacturing technologies, strategic partnership with BOE Varitronix, and 76% EBITDA to CFO conversion are some of its key strengths. Coming to weaknesses, low promoter holding with 21%, exposure to automotive cyclicality, and working capital intensity where its debtor days are 84. So these could be some weaknesses. And coming to opportunities, 14 to 15% export target by fiscal year 2028, entry into 4,000 crore display market, expansion into German OEM platforms, and inorganic growth via 2030 million cash surplus could act as a opportunities for the SJS. And coming to threats, global OEM volatility affecting export volumes, technological obsolescence in digital cockpit trends, and intense competition in legacy decal segments could be a serious threats for this company. So as an investor or about to invest, what are the key monitorables to be tracked are its Hosur commissioning, whether the plant set up for cover glass in fiscal year 2027 will be completed or not. And export milestone, can its export hit the 13% mark by the end of fiscal year 2026? And how will the 2030 million cash will be deployed? Whether they are looking for value accretive M&A or not, we need to track. And its margin floor, can they maintain a 28 to 29% steady margin during the display ramp up? And its new gen mix, monitor if new generation products crosses the 25% revenue threshold. And Hero MotoCorp consolidation, increasing share of wallet with this mega account is also a key thing to be watched out. And in recent times, in Feb 2026, ICRA revised its credit rating to AA minus positive, a sign of extreme financial strength. And in February 2026 alone, there is a stake acquisition of 2.08% in DB Renews to secure 2 megawatt of wind power, moving the group toward 80% renewable energy. So also the company launched a pink lane for women operators, enhancing its shop floor diversity as well. So SJS Enterprises is no longer a small cap component player. It is an aesthetic powerhouse successfully navigating the transition to a digital premiumized world. Hope you like this video. If you like this video, please do like, share and subscribe to my channel Murthy Finance Academy. Thank you.